Back for part 2 of the Iron Condor video coaching series. Part 1, we went over the scan settings that I utilize. The order, the stocks sorted by IV percentile, descending, all the different criteria, and the fact that I go here to gadgets and I go to personal and choose, this is the one that we built there was high IVP, high IV, no earnings. Choose that, let it load over here. Customize the top row, make my current set symbol last, percentage change, vol index, and IV percentile. Once I do that, I apply, and I make sure that my IV percentile is in descending order. So the underlyings at the top are the priority and have the highest IV percentile. So what do I do next? How do I fully utilize that? Let's use, so the first thing I do here is you see this little icon here on your screen. If you haven't linked it, it'll show as a red, yellow, and blue triple box there, and so will this area right here and every other linkable page. So the first thing I want to do here is change this. I like to use TickerTank orange, and I want to link this page here as well. So what that does is if I click right here, it's going to automatically load it over there. And from here I can either hit enter on my keyboard to go down, or I can hit the down arrow on my keyboard to go down. So it's a pretty handy way to quickly roll through some underlines and see if you have liquidity. So that brings me to the first thing I do when I'm looking for Iron Condor candidate. The most important thing, and I've mentioned this in a lot of videos, liquidity is king. And what do I mean by liquidity? Well, I want a bid-ask spread, preferably of 10 cents or less. If it's a really expensive underlying, by really expensive I mean maybe $150 or more. I'll give it a little bit of leeway, say 15, 20 cents max. And then there's some names like Google in the past and Apple in the past, not so much anymore. Priceline, maybe give it a little bit more leeway than 10, 15 cents, 20 cents. So it's just kind of a feel. If you see a really wide bid-ask spread in a really expensive underlying, the thing to focus on would be volume and open interest. So we'll go over all that stuff here in a minute. But my core framework for Iron Condors is you want the liquidity. We just kind of discussed the liquidity parameters, tight bid-ask spread, a volume, preferably of 500 or more later in the day. Early in the day, of course, that volume is not going to play as much of a role because it's not going to have time to have populated. So early in the day, you really just have to focus on that bid-ask spread tightness. And I like my open interest to be 1,000 or more later in the day. Again, early in the day, that's not going to necessarily play as large of a role. So those are the three liquidity parameters. The emphasis on bid-ask spread is the most important of the three. Also part of the core framework, so first is liquidity. Second, I prefer to avoid underlyings that have earnings in the next 30 days. So the third portion of the core framework is I prefer underlyings that have diversity built into them, namely ETFs, sector-based or indice-based ETFs, but that's not mandatory. I'm not going to just completely avoid trading something because it's a stock like Apple that has headline risk and managerial risk and all the other risks that are associated with an individual company. But I do prefer trading ETFs when the opportunities arise. So that's the core framework there. So to really quickly, now that we've set up that scan, here's a way I quickly determine, I'll go through this list and I'll write down, old school, what's liquid enough to trade. And sometimes you're going to get a ton of liquid, ton of underlyings that have liquid options in this list, and sometimes you're going to only get a few. So let's just kind of take a quick look. Here's the way I like to do it. I like to choose which month I'm going to be trading. In an Iron Condor, I like to be somewhere between 25 and 50 days until expiration. So let's take a look at December. December falls in that range best. I prefer to use standard monthly options rather than weeklies, because even though weeklies are getting more and more liquid as time goes on, they're still not quite liquid enough in most cases. You can look at the weeklies and see if they're liquid enough. So if we compare, say, the 14 strike in December standards on NUGT, well, this isn't liquid enough anyway. Let's go down to SCO. We'll look at the closest to the money strike on the put side. It's 105 bid, 4 ask. That's horrible. GDX. Closest to the money strike is 1950. 89.94. Now we're talking. So we've got a 6 cent bid ask spread. If we look at the weeklies, you can see that same strike is $1, $1.14. So we went from 6 cents wide bid ask spread to a 14-cent wide bid ask spread. So the weeklies are far less liquid. Another thing you can look at is on that 1950 strike, there's 0 volume on the weekly versus 394 volume on the standard. And there's 9,700 on the standard in open interest, and only 137 on open interest on the weekly. So you can see weeklies will eventually get there, but they're not quite there yet. So I'm going to focus on the December standard. As mentioned, the criteria for time, my duration criteria, 25 to 50 days. 30 to 45 days is the sweet spot. If I'm going to go outside of that 25 to 50 day duration parameter, I will never go below 25, but I will go above 50. So if I was going to go outside of it, I would use the Janes, with 57 days. So there's 7 days outside, 7 days above the top end of that 25 to 50 day duration range. But since December falls right, here in our range, 25 to 50, might as well use December. Okay, so we're looking at GDX here. Here's the first one that we found that has liquid. So what I'll really do is I'll just look at the closest to the money put or closest to the money to call. So you can see closest to the money call is 20. It's got a 2 cent bid ask spread, 102 versus 104. The 1950 has, we already determined, a 5 or 6 cent bid ask spread here. I also like to look at the volume of open interest. So the volume on the calls is huge, 3570. The open interest is 29,450. On the puts, the volume's not quite as big, but it's still pretty solid. So I would definitely deem this as liquid. So if we go over here to GDXJ, and we quickly look, there's 20 cent bid ask spread, 111 volume, 800 open interest, and 20 cents over, well, 30 cents over here. And yeah, this is questionable. Probably would avoid that. So you can just roll through real quick, and there's going to be some that you see right away like this. It's a $1.20 wide bid ask spread. No thanks. ABX, that's great. So what I'll do is I'll literally write these down. So we've got GDX is our first one, GDXJ with a question mark next to it. It's questionable. ABX is another good one. And I'll just roll down this list. GG, we've got pretty tight bid ask spread there. That's solid. The volume's a little questionable on the put side. Volume on the call side's so-so. The open interest is so-so. It could be better. But all in all, it's a pretty tight bid ask spread. Maybe, maybe it's liquid enough. And I'll just roll through here and I'll go down until I get, 10, 15 candidates. And then from there I'll start building. But we've already found a pretty good candidate here in GDXJ. So let's stick with GDXJ. So just to review what we've talked about in this particular video, in the first video we talked about all the scan settings and how to populate them over here in the gadgets area. In this particular video we kind of recapped that a little bit, and it showed you how to do the trade link here, the linking, so that we can get the links set up on the trade page and the link it up with this gadgets area. I also like to link it up on the analyze risk profile, which automatically makes it link up over here in probability analysis. I don't link up think back or fundamentals. I do not. And over here in charts, I link it. So you can see this one's linked with orange as well. So we've got GDX selected. We already have a chart of GDX pulled up right here. It's pretty handy. On the Analyze tab, it's already showing GDX. We don't have any trades to analyze, so it's not showing anything on the risk profile here. And you can see on the trade page, we've got GDX populated. So I've mentioned that if you hit Enter, once you click into this gadgets area, if you hit Enter, it'll just automatically roll through all these different underlines, and you can quickly grasp what is liquid and what's not based on the liquidity parameters. And we discussed the core framework for the Iron Condor, which is liquidity is king. We prefer diversified underlyings, but that's not mandatory. And we want to stay 30 days or more outside of earnings. We also discussed the duration parameters for this particular trade. And the duration parameters are 25 to 50 days with a sweet spot of 30 to 45 days. And if we're going to go outside of that 20 to 50 day duration window, I never go under 25 days, but I will go over 50 days. So more duration's okay, less duration not okay. That's going to sum up this video. Let's keep it simple. Move along on the next video. See you in part 3.